going to try to break down and provide some a backdrop for this correction. And keep in mind, I'm analyzing this correction through the lens of looking predominantly at Bitcoin and crypto charts. Now, obviously, if there's issues in the stock market or in the legacy market, there's outside FUD, whether that's China, the China blackout causing a drop in Bitcoin's hash rate and subsequently causing a crash, or if it's related to the potential tax hikes. I'm cutting all of that out and looking at predominantly historical Bitcoin movements and corrections, right, for this analysis. Now, if we look at this bull market cycle in 2016 and 2017, or rather mainly 2017, we can see a series of corrections throughout the entire bull market. First correction was 34%, second was 34%, then a 33%. Now, there's something really interesting about these 34 and 33% corrections that we'll get to later. Then we had a 39% correction, followed by a 40% correction, followed by another 30% correction. So these corrections are quite common, even in a bull market. And it wasn't until the final peak where we saw over a 40% correction. We saw a 43% correction when Bitcoin peaked. Now, if we look at where we're at currently, and since I took this screenshot, I think we did make a new low. It was a couple $100 lower maybe than what our previous one, but we're going to call it 27% correction. So far this market cycle, we've had about 3 corrections over 20 to 21, and that's been the 31% correction from $42,000 down to about $28,500. We had this 26% correction that resolved itself quite quickly, and we're in the midst of about a 27% correction. So this isn't out of the norm for what we've seen in the past with Bitcoin, and it's definitely not out of the norm for what we can see Bitcoin bounce back from. And in fact, this is a logarithmic chart that you're looking at right now for Bitcoin in 2017 and 2018. So this last move up after the 30% correction down to around this last 40% correction took us down to about under $3,000, and Bitcoin then rallied to $19,700 after a 40% correction down to $3,000. So Bitcoin can absolutely bounce back after a nasty correction. It's not out of the realm of possibility. In fact, historically, it's quite likely that we bounce back in a bull market. Now, we've got Bitcoin's price here from 2012 to present. And what I want to draw your attention to is the market tops, the market peaks, and what they look like in comparison to where we're at right now. If you notice the pattern here, these peaks are very sharp and sudden, and Bitcoin never follows through and retests that level. Every time Bitcoin's ever followed back up and retested a level, it has eventually broken through it. I've actually highlighted these regions here in green. And you can see the market tops are very volatile. It goes up and pokes the top, comes back down, and doesn't retest it. We've been at a point where Bitcoin has tested and retested $60,000. $60,000 has been a brutally difficult line of resistance for Bitcoin to get through. But historically, when we test and retest over and over again, we eventually get through. And I know we did get up to almost $65,000, but we fell right back down. When Bitcoin does this historically, based on previous market cycles, now, of course, history repeats itself until it doesn't, right? Just because this is the pattern we've seen in the past doesn't mean that it has to repeat itself. But if we want to look at history to try to draw rational conclusions for the future, this doesn't look from a chart pattern perspective like a traditional Bitcoin top of the market. Also want to draw your attention really quickly to altcoin dominance. Altcoin dominance just hit a really key level of resistance at 50% that I think could be causing kind of overlapping with this peak that we saw in Bitcoin, where altcoin dominance has gotten a little bit overextended and might actually need to come back down for a correction. It's shot right up from 50%, really to 50% without really even stopping. So altcoins do seem like they need to cool off a little bit. And speaking of altcoin market cap, we see that we have had a little bit of a correction. So this is all the cryptocurrency value in altcoins. So this is the total cryptocurrency market cap minus Bitcoin. And what I want to draw your attention to is the overvaluation against this trend line that the altcoin market cap has seen. So this linear trend line on a logarithmic scale means that the altcoin market cap space, or the altcoin crypto space, has been growing at an exponential rate with occasional parabolic bubbles off of this trend line. Our first bubble was 2,400% overvalued, followed by a 7,700% altcoin season. We're currently at a 332% overvaluation against this trend line. Now, obviously, we would expect decreasing volatility as the market matures, right? So I don't think we're in for a 7,700% overvaluation. In fact, we might not even get to a 2,400% overvaluation. I think that would be, way too high. But we are only at a 332% overvaluation against this trend line. And I do think that is low compared to what we could get to. So just more evidence that we might not be at the top yet, or we may not have peaked. Same thing goes for total crypto market cap. We are currently about 350% overvalued against this trend line that we've seen. Now, we have been on a trend line of 6 green months in a row, 6 green months where the total cryptocurrency space has been growing and growing very rapidly at a parabolic pace. Getting a red candle or a red month isn't that big of a deal historically in bull markets. If we look back at this 2017 run up to where we were overvalued 2,600% against this trend line, we had if we draw this white trend line and we can zoom in here, we had periods of time where we were overvalued against it and undervalued. We oscillated up and down above it and below it. So maybe we do go below it, and hopefully the bull market can continue on to our targets of maybe $3, $5, or $10 trillion. Now, so that's the backdrop for this analysis. And that's to say is, if you're going to ask me personally, based off of historical Bitcoin data, cutting out all of the China blackout FUD and the tax FUD, and cutting out, looking at the legacy market, if we're just looking at Bitcoin, it doesn't feel like a traditional Bitcoin top yet, right? So recently, Bitcoin has seen this stark correction. It's been about 2,700%. We've actually dipped a little bit lower since I took this screenshot, but you can see there's very, very strong buying pressure at 47,777, which, as we've wicked below it, the buying pressure has come back in. Now, these are what I refer to as margin buying pressure levels. I'm not going to get into exactly how to calculate them in this video, but what they signify is the level at which long leverage traders can start buying and have their liquidation point below a key support level. In this case, 43,000. So as Bitcoin drops below 47,777, people can go long on 10x margin and get their leverage or their liquidation point under 43,000, which is a very key support level. 10x is 10 times the normal buying pressure as usual. Now, what's also interesting is we have our 4x short level that held as support as well at 48,640, right? We ended up bouncing off it and breaking through below, but this is the point at which shorts can no longer have their liquidation point above the all-time high at 64,854, I think was the all-time high. Now, all that to say, if we fall through, the next two levels are our $43,000 base level and then our 3x short level, where if Bitcoin drops below 43,236, the 3x shorts cannot have their liquidation point safely above the all-time high. Now, further support at $43,000 is both this trend line, this white trend line, is the trend line we were at before the pandemic. And then you saw the pandemic crash happened. And I would postulate that all of this price action in 2020, for the most part, was undervalued against the trend line that we would have been on in the bull market, had the pandemic not hit and suppressed the price and caused this crash. So eventually we did get back on track as we hit $42,000, Bitcoin got back on track on this trend line, has since extended above this trend line, but a correction to $43,000 would bring it back down to touching this trend line. Now, coincidentally, 43,000 or thereabouts, 43,413 is also the 20-week moving average. Historically, the 20-week moving average is massive bull market support. When Bitcoin comes back down to touch the 20-week moving average, you want to cross your fingers, hope, and pray that it holds and gets a bounce off of it. Historically, it does do that in bull markets quite often, quite frequently. But when we break below the 20-week moving average, historically, it's not a good thing. However, historically, it has been very strong support. Now, a correction down to $43,000 would also be a 34% correction. As I mentioned, was a very popular correction point in previous bull market cycles. Why 34%? Because that is where the 3x shorts run out of selling pressure. You can no longer go 3x short once you cross over 33.33% of a correction. That's why 34% historically, if we go back to the very beginning, these 33, 34% corrections are so common. Now, occasionally we go below that, a deeper correction, but 33 and 34% corrections in Bitcoin are quite common. And that's the anatomy of this market correction for Bitcoin.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.